We have Nishit Shah joining us from Phillip Capital PMS. And Nishit, thank you very much for joining us today. First of all, I'd like
Thanks,
to
Ajay.
understand from you what's your hypothesis in the market in the 3 to 6 month kind of a period, especially in light of the last evening's commentary from Federal Chief.
Thanks, Ajay, for having me. Actually, this is my first media appearance, so thanks again. And secondly, of course, I would like to wish all the women a happy Women's Day. I will try to break your question into a couple of points. So one, if you go to see since COVID, globally, we have been in a perma-crisis kind of a situation. One after another, we have seen each issue cropping up. And because of that, we have seen a lot of volatility. Of course, India has its movement wherein we outperform. And of course, since last few months, we have been underperforming as well. Secondly, at the same time, what had happened, we had thought that, okay, we are way ahead of the geopolitical situation and the inflation, and because of that, the interest rates. But both of them still persist. In fact, inflation has been very sticky. We heard the Fed chairman yesterday as well. And I think there's still some time before we see the peak of the interest rate cycle out there, especially in US. Thirdly, if you go to see Ajay, what has happened at the market level, maybe at index level, we have fallen down only 8 to 10%. But if you try to dig deeper, and I was just looking at some numbers, 85% of the stocks are down more than 10 to 15%. Okay, 30% of the stocks are down around 30% kind of a thing. And mind you, this is only for companies wherein market cap is above 5,000 crores. Below, the carnage has been even worse kind of a thing. Yeah? So given that kind of a perspective, we feel that, okay, next 3 to 6 months, I think there is still a lot of volatility will persist in the market. We'll have to go through that grind. And also we need to see that, okay, we had great 2020 and 21 kind of a thing. Yeah. So maybe market is taking its time kind of thing. Yeah. So that way, 3 to 6 months, I think we'll see a lot of volatility continuing in the Indian markets.
Right. Okay. Tell us how much valuation compression is possible if rates here also in India continue to rise slightly longer than what the street has penciled in.
See, as far as valuation is concerned, I think from the 40 valuations that we are around 18, 20 months back, I think valuation wise, we have come to a reasonable kind of number. Yeah. Maybe we are at what EPS of around 850 next year. Maybe we should do 940, 950 kind of a number. Again, people might have a little bit of a opinion, maybe 2%, 5% here or there. But otherwise, I don't see that to be a very big issue. I think as far as valuation are concerned, we are in that comfort zone. We'll continue to see the volatility. Yeah? See, again, over last 8 to 10 months, what has happened? Of course, index has fallen down 8, 10%, but I don't see maybe a major fall coming in from here. That is what our house view is as of now. That maybe we'll continue to see volatility, but we would not see a kind of a major fall. See, the market maybe corrects by a huge percentage only when there is an unknown kind of thing. Right now, both the situations, the inflation slash interest rates and the geopolitical situation is a known no. So we would not see a crash because of these two things. Of course, tomorrow if something else comes up, I don't know. But as of now, we strongly feel that this is a good level to kind of to get into the markets. You have to use the volatility kind of thing to get into the markets, and then maybe ride on for next 5 to 7 years.
I see a lot of mid-tier, mid to small engineering and capital good related stocks, Schaefflers and KSB pumps. Just for example, what is your thought process? Many of these stories have very structural tailwind for sure, but then these stocks are not very cheap as well. What are your thoughts on their earnings potential, say 2 years far out? Do they look fair? Because you must have done the numbers 2, 3 years far out.
Sure. So see, after a very long time, the capex cycle has picked up in India. And if we historically we see, whenever the capex cycle picks up, it generally goes on for 6 to 7 years. And government focus is clearly on that side. Manufacturing is the base that they want to kind of take it up, kind of thing. So we are very confident on capex as a theme going forward. Of course, we like all the companies that you mentioned, kind of thing. I would not like to comment on individual companies, but structurally, we like some of this well managed, wherein there is a cash on balance sheet. There are certain moat around them. The return ratios are kind of decent, kind of thing. So we like this kind of companies rather than, because what happens this at the end of the day, these stocks are very cyclical. If you're not able to make one of the decisions right, maybe the buy price or the sell price, you are back to square one. So that's why we like to play it a little bit safer when we are taking an exposure to especially the capital goods sector. And that is why you have seen few of the names that we have invested in. Of course, now coming to the valuations, they are no longer cheap, kind of a thing. But clearly, the tailwind is there. Okay, whenever you talk to this management, yeah, through the analyst meet or conference calls, the management itself are quite confident. They are seeing kind of a good demand growth, and they are seeing a good order book going forward as well. So we easily see maybe 15-20% kind of an EPS growth for them over next 2 to 3 years. And that, if putting that into the context of the valuation, then maybe they seem cheaper. Not cheap is not the right word, but maybe they are reasonable, kind of thing, given the growth potential, given the tailwind, given the structural balance sheet strength they have, and the moat they have around their products.
Right. Okay, one more thing. I want to understand how is the earnings profile of your portfolios looking right now? Do they have comfort of 18-20%, or some of them have even higher? How you assess the quality of earnings of your portfolio after the quarterly earnings season?
Sure. So see, of course, this quarter earnings was a little bit of a disappointment, kind of thing. Okay, across not only our portfolio but across the entire market, kind of a thing. We saw issues because of maybe global concerns, or maybe raw material prices, or maybe at some places logistics issues and multiple demand-led in thing. Yeah. So that way, this earnings season was not great, kind of a thing. But at the same time, what you will have a mix of stocks in your portfolio. So some of them maybe over next 2 to 3 years might grow 18, 20, 25%. Some of them maybe might have challenging times in next couple of quarters, but they will have a kind of a, they will do well maybe post that, kind of a thing. So overall, whenever we invest into any stock, what we look at is, will the earnings grow by at least by 15% over next 3 to 4 years? If the answer is yes, then only we do invest into those stocks. Sometimes the earnings might come up first and then the valuations might catch up. In more some cases, the earnings might come later and the valuations might catch up later as well. So that is our thought process as far as the portfolio construction is concerned.
Right. Okay. So your hypothesis of the market is that we may have slight negative bias, but not much downside unless
Sure.
there's a big accident globally. But in 3 to 6 month consolidative period, and thereon, market can start building in, because in the second half of the year, inflation may actually come down, rates may peak out. Going into next calendar, we may even see rate cuts. Do you agree with that?
Yeah, perfect. Yeah, so see, we are at the fag end of the interest rate hike cycle. Yeah, maybe two more, three more in US, I don't know. Okay. But we are not in the middle. We are at the fag end of the thing. Okay. Once, and the high base effect will also start coming in. Okay. At the same time, maybe the earnings growth also would come in for most of the sectors. There are a lot of values emerging in couple of sectors like pharma or IT or specialty chemicals sector. So that way, I think market is in a very good position. Again, I would not know what will happen in next 3 to 6 months. But if you ask me, if with a 3 to 5 year kind of an investment horizon, I think this is a very good time to kind of get into the markets.
Okay, great. Nishit, thanks very much for chatting with us today. Look forward to
Thanks,
interacting
Ajay.
more often from here on. That was Nishit Shah.